Up everybody, Logan here again with another video coming at you. It's another sponsored video, which I'm extremely grateful for another opportunity. Today we're going to talk about tokens.com. Ticker on the OTC is Smurf, S-M-U-R-F, and ticker on the OTC is Coin, C-O-I-N. So they go public. It shows ground floor potential to power the skyrocketing NFT and DeFi sectors. As you guys know, cryptocurrency and NFTs have been some of the hottest things that I've heard about as of recent. And with efficient and environmentally friendly POS mining and a mouth-watering valuation, this may quietly be generationally groundbreaking IPO. Coinbase got a lot of attention the other week after it went public, and for good reason. The digital currency space is flourishing, and Coinbase is the largest exchange of its kind to go public. However, get this, Coinbase may not be the best place to play the sector. The juice has been squeezed. VCs who got into Coinbase years ago got the 4,000x return. On the other hand, this company I came across, tokens.com, may have a similarly growth trajectory as Coinbase had in 2013, but the difference in 2021 is at the forefront of democratizing finance with a next-gen model business focused on cutting edge and environmentally friendly proof-of-stake technology, which we touched on earlier. If digital currencies and blockchain technologies is a city, companies like tokens are the infrastructure and plumbing, while tokens captures asset appreciation. Coinbase does not. Comparing tokens to Coinbase would be more appropriate for the Coinbase of 8 years ago, when it was an emerging pioneer showing generational growth potential. In 2013, Coinbase did a Series A at about 20 cents a share at a valuation of around 20 million. Later that year, the company raised a Series B at about $1 per share. By the time I could get stock in the company 8 years later, when it went public in April 2021, it was valued at roughly $100 billion. Think about it. This is roughly 20 million valuation in 2013 to nearly $100 billion valuation today, an approximately 4,000-fold increase, right? Tokens.com is firmly positioned to potentially follow in 2013 Coinbase shoes as a company at the forefront of powering a high-growth industry. Days away from going public in Canada with its US OTC listing in progress, you may want to get on this bandwagon before everyone else gets tipped about it. Why? This is a company at the forefront of the future of digital currencies because it's focused on POS mining technology. Crypto miners such as Marathon Digital Holdings, Riot, right, and Hive, I've heard a lot about those, are the closest public market comparisons. However, they can't compare to tokens' next generation operations. Put it mildly, these companies are using old generation technology compared to tokens. After all, what does it tell you? If Hive, supposedly one of the token's most significant competitors, made a strategic investment into tokens during the seed round, it could only mean that they see tokens as the future. As a sports nerd and digital currency enthusiast, I've spent more money than I'd like to admit on the NFT platform NBA Top Shot, and am eagerly anticipating other sports leagues joining the NFT craze. After all, Dapper Labs, the company behind NBA Top Shot, recently raised about $305 million, while being valued at approximately $2.6 billion. I know that the NFL could be penetrating the NFT space very shortly too. I also know that Tom Brady is launching an NFT company. Wow. While NHL star Austin Matthews also just unveiled an NFT collection for auction. It's no wonder then that this blockchain-based digital collectible network has seen eye-popping transactions such as legendary LeBron James Top Shot for $208,000. Wow, that's crazy. An NFT sold via Larva Labs for about $7.6 million. Not to mention the total market cap for NFTs has exploded from just about $31 million in 2017 to $710 million in 2021. What a rip, man. 125%. NFTs are funny because I really never paid too much attention to them until like the last month. Even when they were like the craze in March, like right when they started to make the news, I was just like, just haven't really paid too much attention to it until, a couple weeks ago. But this is maybe the only beginning of the long-term growth story of NFTs thanks to its simplicity, gamification, and deeper foundation. DeFi makes financial transactions more secure, more accessible, and more open and internationally universal. DeFi has built itself into a global, more accessible, open alternative to everyday mainstream financial services, including savings, loans, trading, insurance, and more. It was growing long before 2020, but now it's skyrocketing, and tokens.com has perfect exposure to it. This is nothing short of a snowballing industry. For example, the amount of value locked in DeFi moved from virtually zero last April to over 56 billion. Wow. Not to mention about 20 billion has been paid out in staking compensation with an average return on deployed capital of 11.2% for 2020. Still not convinced? Let's take a look at the approximately 6.8 trillion lending sector. We're currently in a zero interest rate environment right now. Thanks to the feds, 100%. Isn't that crazy? 0% interest rate. Shout out the feds. Just look at the annual percentage yields and how they compare. You guys can see here's the annual percentage years. You can look at Bitcoin, the different tiers, Ethereum, Litecoin's also here as well. The best part, tokens.com may be the only value in this stock, coupled with exposure to the enormous generational upside potential of DeFi and NFTs. This company is perfect for those who want exposure to DeFis and NFTs without the burden of buying, managing, and securing digital assets themselves. When you also consider its revolutionary POS, tech, and expert management, I for one do not know of any other soon-to-be public company doing what this company is doing. Then we have the top 10 reasons to pay attention to tokens, as you guys can slow down and read this if you want to get more in depth on them. I touched on a lot of them already. Who is tokens.com? Tokens is a technology company that provides its customers with a simple and secure way to invest in digital currencies that power decentralized finance. That's what DeFi means for anybody who didn't know. And non-fungible tokens, which are NFTs. This is achieved through tokens, transformative POS technology, the environmentally friendly way to secure blockchains, an alternative to energy-intensive proof-of-work mining. For the next 3 years, almost all digital currencies are expected to rely on POS technology, either as a result of switching from POW to POS or by natively launching a POS blockchain. Tokens looks primed to be a leader in this space as the first publicly traded POS technology company and shows potential to have considerable market share and benefit from the expected growth and increased reliance on POS. Tokens also creates value for the shareholders by earning staking yields and appreciation of its digital asset inventory. In other words, they take care of the burden for you. This company is perfect for those who want exposure to DeFi and NFTs without the burden of buying, managing, and securing them right in your own wallet. In other words, Token creates value for shareholders today and has a highly scalable business model that could continue to capture the value of this space without the burden of personally managing the underlying exposure. Why Tokens, the premier staking company, positive revenue, exposure to decentralized finance and NFTs, best-in-class staking, partners and custodians, experienced management team. On the other hand, POS is more environmentally friendly, more decentralized, has a higher transaction throughput, and is highly scalable asset-light business model. This is where tokens.com comes into play. Centralized finance and non-fungible tokens have to be built on platforms that use POS and pay fees to these platforms that go to tokens for validating the transactions. Thus, as the DeFi and NFT markets grow and pay more fees, tokens acts as a proxy for what's happening there. Furthermore, while tokens inventory appreciates in value, traditional mining equipment depreciates, not to mention tokens barely uses any electricity and claims to produce zero carbon emissions. That's going to be everything for me in this video, guys. Always make sure to do your own due diligence before investing. And I'm not a licensed financial advisor. Just take that into consideration. This is a sponsored video. I've been paid to promote this company, and they're really interesting. So make sure you guys do your own due diligence before investing. Hope you guys have a fantastic rest of your day, and I'll see you guys in the next one.